Hey, it's Jeff McGinnis at CrossCountry Mortgage, and today I'm going to discuss how long it will take from a major derogatory event before you can qualify for a home loan again. A lot of times, things happen in life. Sometimes there's divorce. Sometimes there's loss of job, maybe some medical issues, and people experience things like bankruptcies and foreclosures and short sales and that sort of thing. So if you are disqualifying yourself because you've had this in your past, maybe you should, maybe you shouldn't, but here's a little helpful way to figure out whether or not you are eligible. So I'm going to share my screen here. Let's take a look at some of the different loan types and the different chapters of bankruptcies and foreclosures and short sales, or what we call deed in lieu. Okay. So as maybe you've seen in some of my other videos, we might be using a different rule book than for different programs and pricing. So it's like if we play basketball and we're playing at the high school level, that's going to have a different rule book than the collegiate level or in the professional level. Still basketball, you're still dribbling and playing basketball, but it's got a different rule. So in lending, it's similar, right? So you've got different rule books. So that's the first column. What loan type are we going to be using? So if we're using a conventional loan and there's a Chapter 7 bankruptcy, we need 4 years from the date of the discharge. If we have a Chapter 13 and it's Fannie Mae or conventional financing, we're going to need 2 years from the discharge date and 4 years from the dismissal. A foreclosure unconventional, it's going to be 7 years. And then on a short sale, it'll be 4 years. Okay. FHA, it's a little bit different. It's a little kinder. So it's 2 years instead of 4 years from the discharge date. And then there's a whole bunch of other stuff that goes along with the Chapter 13. If you have a Chapter 13 bankruptcy, you need to have 1 year of the payout must elapse, and then you must be on time and satisfactory with the payout, and then you got to get the court's permission. So it's a little bit more lenient than, say, Fannie Mae. Also with the foreclosure, instead of 7 years, it's 3 years. Also with the short sale, it's 3 years. And USDA tends to mimic FHA, and except in the Chapter 7, we've got to have 3 years from the discharge date. 1 year payout must elapse, got to have good standing, and you got to get court's permission. And then we need to have 3 years, similar to FHA, for the completion date from the foreclosure. Then we've got also with the short sale. So they also mimic each other in that regards. The VA, we need 2 years from the discharge date. So they're very similar to FHA. And then these are very, very similar as well. We have the 1 year performance has got to be good, and then we got to have court permission. And they have 2 years on a foreclosure for our veterans. And then in the short sale, it's not specified, but assume 2 years is the idea. Now, if you happen to be a real estate professional and you're watching this, feel free to pass this along to a client that maybe they have some credit that's that has a major derogatory in it. If you find it valuable, like the video so it gets a little bit more word out there. If you happen to be a borrower, gosh, reach out to me. If I've done my job right, there should be like a schedule meeting button up here or in the description, and click on that. Spend some time with me. We can go over your specific situation, and I'm happy to help you where I can. All right. Have a great one. Good luck out there. Talk with you soon.